To execute accounting services, districts employ fund accounting, a system of managing the flow of revenue, receipts, and expenditures. Fund accounting displays distinct fiscal accounts for record keeping, tracking of records, and reporting revenue, along with documenting expenditures on financial reports. All school districts must track accounts in three main funds: government, proprietary, and fiduciary. Within these funds, district personnel assign federal and/or state account codes for business transactions. Government fund accounts, financed generally through taxes and intergovernmental revenue, include general, special revenue, debt service, and capital project funds. The general fund, the largest district operating account, retains unrestricted revenues from property tax and state basic aid and details expenditures for any legal purpose. General fund dollars may be commingled with other funds as necessary and reallocated in a future fiscal year when available. The Special Revenue Fund receipts restricted funds from specific sources such as categorical aid, federal entitlements, restricted tax levies, and athletic programs. The Capital Project Fund accounts for deposits from state building grants or permanent improvement levies. Expenditures in the Capital Project Fund acquire equipment, construct and renovate buildings, or purchase land. The Debt Service Fund accepts revenue from bond issues and accounts for expenses on long-term debt obligations for principal, interest, and related costs. School personnel may not commingle special revenue, debt service, or capital project funds with other fund accounts. Proprietary fund accounts manage non-governmental business activities classified as either enterprise or internal service. The Enterprise Fund categorizes personnel, supplies, and purchase service transactions from the bookstore, food service operation, and athletic program. The Internal Service Fund receipts income and expenses incurred from departments within the school district, such as central printing, duplicating, warehousing, and data processing. The Fiduciary Fund accounts maintain assets as the fund trustee from partnerships within the district or for endowments, donations, and gifts. A district, for example, may have private purpose trusts for pension accounts established for employee retirements and student scholarship funds. The school district staff oversee the fund and distribute the proceeds, including the principal and interest, in accord with trust agreements. For internal agency funds within a fiduciary account, such as student clubs, the district transacts income and expenditures in a custodial capacity. The Student Activity Fund, for instance, receipts cash generated by student participation in an organization and expends monies to offset costs incurred by the group's activity. In an external government agency fund, a small community library, for example, may request a school district to receive the library property tax and administer expenses. Fiduciary funds may not support school operating costs. This chart illustrates the proportion of revenue in each fund, with the general fund the largest by far. The field string explains every transaction in accounting terms, and each line captures a specific description regarding a transaction. This graphic with the federal codes illustrates the field sequence with corresponding codes from the broadest operational category, which is the general fund, to the narrowest, which is the instructional level. This line describes a general fund transaction in the regular elementary and/or secondary program, or the 100 account, and the instruction function, or the 1000 account. The field string further details the expenditure for regular employees' salary, or the 100 account, in a local project, or 010 account, at the elementary school, or 10 account. Because school administrators and Board of Education members rely on fund accounting data to support daily operations, decision-making, and performance evaluations, they must possess a basic understanding of the fund accounting system and the state's chart of accounts. CFOs and/or treasurers, on the other hand, must exhibit a keener knowledge of fund accounting and a state's chart of accounts than school administrators. Go to the table 5.1 in the text to look at your jurisdiction's chart of accounts.
Generally accepted accounting principles, also known as GAAP, are the common set of accounting principles, standards, and procedures that companies use to compile their financial statements. GAAP are a combination of authoritative standards and simply the commonly accepted ways of recording and reporting accounting information. GAAP are imposed on companies so that investors have a minimum level of consistency in the financial statements they use when analyzing companies for investment purposes. GAAP cover such things as revenue recognition, balance sheet item classification, and outstanding share measurements. Companies are expected to follow GAAP rules when reporting their financial data via financial statements. If a financial statement is not prepared using GAAP principles, be very wary. That said, keep in mind that GAAP is only a set of standards. There is plenty of room within GAAP for unscrupulous accountants to distort figures. So,
although the video talked about companies using GAAP and the bottom line for investors, governmental entities are also required to use GAAP principles. The following GAAP documents describe a district's current and long-term financial status for school districts to communicate financial reports to stakeholders. The proposed budget document. A statement of net position depicts all the district's long-standing governmental and business activities by assets, liabilities, and total net financial position. A statement of activities summarizes the current year's government and business revenues and expenses. This document simplifies financial data for a cost analysis of governmental activities and business actions, such as food service. A fund balance sheet illustrates a district's current financial data by fund. A statement of revenues, expenditures, and changes focuses on current revenues and expenditures. Financial forecasting, a critical accounting function, describes the practice of predicting trends and changes on future district operations by examining actual historical data, projecting student enrollments, predicting local, state, and federal revenues, envisioning expenditures, and anticipating costs associated with salary adjustments, and set baseline budgetary parameters and create the basis for assumptions to prepare budgets. Here is an example of a 5-year forecast that was issued to the State Department of Education. A district's general fund operating budget anticipates revenues and estimates expenditures for a fiscal year. The budget, a blueprint for anticipated financial transactions, informs the public about the district's operation. There are a number of methods to create a budget. Here is an example of a budget approved by the governing agency board. The adopted budget serves as a guide for expenditure allocations, creates a budget authority, and states that the school can spend money in identified accounts. The appropriation authorizes fund expenditures for specific purposes and stipulates the actual dollars appropriated in each account line. To develop the appropriation, school business personnel must further detail account spending than presented in the budget. When the board passes the appropriation, that appropriation measure or resolution authorizes specific spending amounts by particular accounts. Here is a portion of an appropriation with the monthly appropriation account summary, which is the most important internal document for administrators to understand and be able to read. This document captures the following fiscal funds by account code or line item: the appropriated fiscal year to date by account line, carryover funds from the previous appropriation by account, fiscal year to date expendable monies in each account, fiscal year to date of actual expenditures, current encumbrances, which are items that have been legally purchased via an approved purchase order but not yet received or paid, and fiscal year to date unencumbered balance, meaning the money remaining to be spent in the line item. Transfers or modifications within the general fund appropriation lines are often necessary during the fiscal year for unexpected expenses. Typically, the superintendent, CFO, treasurer, program supervisor, or principal may initiate line item transfer requests. The governing board, however, must approve each transfer at a regular board meeting. The audit, an independent appraisal of district accounting, financial, and operational systems, investigates the record of accounts under the authority of the CFO treasurer. Internal, state, and external audits are common types. Regardless of the type, an audit verifies financial data and validates the lawful collection and spending of funds in accordance with statutes and regulations. This slide shows an audit finding against a school district. To summarize, accounting services follow a logical order with financial forecasting in the planning stage, budgeting as the next step in the sequence, appropriating in the implementation phase, and auditing to complete the accounting cycle.